guys, and welcome back to the channel, and I hope that you're all doing well. Now before we get anywhere, I just want to say, as always, I just want to say thank you to everyone who's supported Vertex ever since we began posting on YouTube and Telegram. It's always great to see the progress that you guys have just from simply using the free content, and I'm glad the free content is useful. But yeah, so the last video that we did was about scalping, I suppose. I believe, yeah. So we did a counter trend scalping video, and what I generally do is I post screenshots of a trade that I've taken, and then I wait a few hours or a few days or so, and then I post a video explaining that. Now the next video I was waiting for was waiting for a pro trend example, but the thing is, there was no pro trend example until last week. Another thing to realize is the main, another reason why there's not much content is purely because I only like to do videos of trades that I've actually taken. For me, I don't like working in hindsight purely because I don't know what my emotions would be at that point and whether I would take the trade or not. So at least, I can give you breakdowns of trades that I've actually taken and tell you how I felt, why I've taken the trade to a certain degree of detail. For me, I feel there's a bit more clarity in that sense. I can claim that there's so many opportunities using our strategy throughout the day, and I can claim I've taken every single move, but I'm not going to do that because it doesn't make any sense. And to be fair, there's no value in that for you anyway. So there's no point me doing that. So what I'm going to do in this video is, instead of sending these screenshots, which I still will do, I'm going to do a video of me marking these screenshots out, which I don't know if they're going to be boring for you guys to watch or whether it'll be useful. But either way, I'm going to explain the process of the trade that I've taken. So the trade that we're going to talk about is this AU short. So here's a screenshot, which I'll send in to the group, to the Telegram channel. And so overall, this trade, I believe I secured 24R. So I secured a 10R partial, and then I just closed the whole trade. And I'm going to explain the whole process as to why I've taken the trade, where I've taken the trade, and why I closed it. So let's go into it. So last week I only took 3 trades. So I took this one, which was on the 27th, I think it was. There it was. 27th? Yeah, 27th. And I took a loss the day before. Yeah, I took a loss on the London Open. Now, I'll talk a little bit near the end about, true risk to reward and how I actually trade. Because for me, if I was to take a trade during London, and if that trade won, I wouldn't look in New York for a trade at all. For me, that's enough. I trade for my time, and, the returns that this strategy gives, I don't need to trade that often. That's the way I see it, because I don't want to expose my account too much. Purely because I don't have to, and if I don't need to, then I'm not going to, right? So I took these 2 trades, and I took a GU short, which I suppose I can do a breakdown for another video. This one, I think I have to go hourly for this one. Yeah, this one was a counter trend, so it's the exact same process as the last video I did, but I'm still holding this one purely because I think there's further potential. So at this moment, I've only got 10% of my risk running, so it's not massive, but it's currently running. The analysis is running at 159R, but as I said, it's only 10% of my risk, so it's nothing major, to be fair, because I've taken partials. But anyway, in this video, we're going to talk about this trade in particular, so the winning one, so this one. Right, so this one is using the pro trend model, okay? Now, essentially, what we need to think about is, there we go. So this was the counter trend model, and essentially the only difference is the fact that we are trading pure mitigation, okay, as we go. We don't need to have this whole change in trend and so on. Now, this did start off as pretty much as a change in trend, but it's where I took the trade, which pretty much shows that it's pro trend. And I thought this was the closest example that I can give you guys. Okay, that's the only reason why I'm doing it. Another thing is, my charts are pretty empty purely. Actually, I don't know whether my boxes are gone. There was a box here. Sorry. There's a box here and there's a box somewhere else. I'll draw them on as we go. But thing is, I like to keep my charts as clean as possible and as simple as possible. And I think that's what puts people off our strategy, is because of how simple it is. For me, I want to keep it as simple as possible. Otherwise, I probably won't understand it. For me, I need to have a rule-based system, and that's the whole benefit of having a rule-based system, is the fact that it takes away the guesswork. I don't need to unnecessarily tag stuff and label stuff on my chart for no reason. The stuff I send into the Telegram, which is here with all sorts on here, this is purely for your educational purpose, not for my needs. I don't need them. I can generally eyeball stuff. But that's just because of how simple it is. I have rules for structure. I have rules for my bias and direction. I have rules for my entry. That's all I need. And I have rules for timings and so on. That's as basic and as simple as you need it. Because at the end of the day, you're here to make a capital gain, right? You're not here to show off. You're not here to to be fancy with everything, because there's no need. If there's no need, then so be it. So keep things simple. That's the biggest tip I could probably give you guys. But anyway, what I'm going to do, I'm going to move my Telegram to the side, and what I'm going to do, I'm going to post the links there, and then what I'm going to do at the end of the video, I'll post the links into the channel. So let's start off with what we go off first. So let's go here. Let me hide this. Okay. So the initial thing that we see is we got a clear bullish move. Okay. Now this is something that I don't think about consciously. Like, it's not something that is, I need to have. But this is always a clear sort of. It gives you a clear idea as to what price is doing. So as I explained in the last video, when you look at, not last video, the last post I did, is if you're looking at the last few impulses, because obviously we're seeing a bullish move, right? Let me just draw these out. As I said, I don't know how tedious this would be for you guys to watch, to be fair, because I could be a bit slow in my Telegram. And that's exactly what I mean. That's exactly what I mean. Hold on a sec. Hold on a sec. Let me go back to where I was. I don't know what I pressed there. Oh, I pressed this one, didn't I? Sorry. Sorry. There we go. Okay, so let's go back to here. Okay. Now, a good thing to sort of look at is observe the impulses. So the reason why I say this is because generally what happens is, if you're looking at the impulses, what's happening is that the huge impulse and it gets smaller and smaller and smaller, and essentially that's telling you the price is struggling to go higher now. Okay, now we can't go trading based off assumptions, because we don't know, and we don't want to guess, and we don't want to predict what price is going to do next. But this is a good indication that if we're looking for buys, it potentially won't hold. Okay. And this could probably help you decide, whether it's, whether you want to look for longs or not. Because thing is, for me, if I was going to go for it, I'll be looking for a long from here, looking for a long from here, and potentially from here. Because it's still, if it follows a strategy, if I still get entries here, I'll still take it, because I don't know what's going to happen next. This is why I don't like working in hindsight, because as I was looking at this move, I was still looking for entries. Now, I didn't find, there was no entry here, and there was no entry obviously coming back. There was no entries. I was looking for it, but there was none, because we don't know what's happening next. Which is, as I said, which is why I don't like working in hindsight for you guys and doing videos for no reason. But anyway, having a look at the impulses, this is a good indication that price is struggling to go in one direction, and potentially we may have a change in trend. Okay, so let me just copy the link for this and I'll send it into here. So this is part 1. So you guys can't see what I'm doing. I essentially send it to myself here, and then I post it in. Okay, so let's move on to what happens next. Let's get rid of that, get rid of that. Okay, so in terms of our structure, what happens, let's wait for candle close. So our structural high is here, and our structural low for me is here. Okay, and let's keep going. Now for me, I don't use wick breaks, so for me that's not significant. So now when it comes, okay, so now what we have, let me just go back a little bit. So now what we have this break. So now what's happened is we have a potential fracture of order flow. Sorry, not potential, it is a fracture of order flow. There we go. Okay, and let's use this. Sorry guys. There we go. So what we have is fractured order flow. Okay, now when this fracture happened, I actually missed this, but what we had was, so in terms of this break that's happened here, okay, we've got the OB here. Okay, now in terms of our refinement would be, for us, would be that wick, or you can just go to a lower time frame and see if there's anything in there. But for me, I didn't see this move, so I didn't look for an entry. For me, I generally will look for an entry at the first break and see if our confirmation model and our inception model sits here. That's the only thing I won't teach on the channel for free, for obvious reasons. That's what the mentorship and the course program is for. But anyway, I would generally look for an entry point here. Okay, what I'm going to write is valid entry, valid POI slash entry. Now what I mean by POI slash entry is because we use it as a POI because we look to confirm using our confirmation model within here, using our confirmation or inception model, or you can place an entry. You can obviously just do this. You can obviously just place an order here. What would it give you? A 1 pip stop and so on. You can do that. Because what you're expecting is that this is a change in trend. Some people call this change of character. I'm not going to call it that. You can call it whatever you want, essentially. But this is essentially what the next move is. So let me just copy this link. Send that in. So that's part 2. There we go. Okay, so let's get rid of this. Right, so let's see what happens next. I did it again. I'm so sorry. I'm so sorry. Hold on a sec. I do apologize for my clumsiness there. Where is it? It was here. Okay. So the next part was what happens next here. So now what we have. So if you were going to take the trade straight off here, as I said, you can do. But the risk that you have is if you're going to take it directly, you do have a risk of having a liquidity grab. But obviously, if you take it straight off there, you'll have a perfect reaction. You have the breaker structure, and you can go to break even at this point. So you're going to break even within a minute. Okay. So now what we have is we have clear mitigation, and I'm going to do that in red. So mitigation, and what this means is now we have a point of invalidation. So we have this, and this is our invalidation point, which I put as INV. So what this means is what we can do is this becomes our POI because this is the next OB or SC or IFC, whatever you want to call it. And you can do the trade straight off here. Obviously, we're not going to do that because that's not what we do at Vertex. We have a confirmation model for this. But what we can do is this is another valid entry. And this is higher probability than the first one. Purely because you have the mitigation play and you have the invalidation point. And now what's happening is you are creating order flow. So this is generally what it means. Bearish of F. Again, I'm sorry, I'm trying to be like as smooth as I possibly can, but I'm quite bad at trading view like this, to be fair. Anyway, so we have bearish order flow. Actually, you know what? I think someone made a comment because of how slow I am with trading view and the mistakes I've made. Someone said, "How can this guy trade if he can't use trading view?" But you know, I don't really care about that comment, to be fair. Anyway, so we have a valid entry point, so you can take the trade straight off there. And I think that stop loss is gonna be too big for me, to be fair. Let me have a look. So the stop loss is what? God, yeah, that's too big. If it was me, if I was going to take it straight off there, if I didn't have the seconds time frame, what I would do is just do 50% of that, and I think that would give you a nicer. It might be risky in terms of spread. You could probably do 1.5, which is better than what it was, better than 2. But anyway, I am not going to do that. So my trade was taken, and I'll show you where it's going to be taken. So I'm not going to press that. I almost pressed it. So now we have this this trade here. So this is now triggered, and I took the screenshot of that. Okay, so now this is now triggered. So we now have this mitigation. Now, as I said, you want to enter from here, okay? Because what's happening next is, as we know, in terms of mitigation and order flow, what we want to look for is you want to have mitigation, and generally after the second or third one, we have that full release. If you're having too many mitigations in one go, what generally happens is this is building liquidity, and what happens, price goes the other way. I've seen this happen too many times. You can test it out yourself and see what happens, but essentially I want to enter off the second or third mitigation play if I can. If I can enter on the first one, that's great, but I need to make sure that my confirmation model or inception model fits in. Otherwise, it's very high risk to take that trade. This one was the first trade entry, was a very high risk trade, okay, to take. But anyway, we've got the second one. I don't know if it reached to 50%. Actually, let me leave that on there. Actually, I'll draw it in after and have a look. But anyway, for me, let me put in my entry point again, which is here. So we used our confirmation model, and this is how we entered. So another way you could have done it, so the trade actually moved, okay, following the next mitigation, because what this happened, the trade actually went off there. So that's after the next release. So we have mitigation after mitigation, and on the third one we have that full release. And this is the exact example of what I mean. Is if I take it back to here, right? Okay, so again, what I'm going to write here is valid entry. Valid entry point, and I'm going to just hide this one for now. There we go. Valid entry point. And now what we have is clear mitigation. Now the thing about mitigation, you have to make sure it's clear. Okay, if it's not clear, then there's no point marking it out as mitigation because you can't confirm. Okay, same thing with your invalidation points, because otherwise, if your mitigation is not clear to you, then your invalidation point is going to be wrong as well. Okay, so that's essentially what you can do next. Let me save the link. So this is part 4. So again, what I'm doing is I'm posting it in here, and then I'll post it into the public Telegram group. Okay, so now what I can do is put my entry back in, and as I said, it's the only part I'm not going to explain. What we need is this one. So the entry here was taking off. Entry via the Vertex confirmation model. Okay, and again, this is a rule-based model that we have. It's a rule-based system for everything. And you know, a good thing to look at is if you scroll back up the Telegram group, every trade that we take has the exact same model. Okay, that's the whole benefit of having a rule-based system, is that it doesn't change. Okay, now obviously if the markets change, we have to adapt, but the rules stay the same. Okay, the rules stay the same. It's just a matter of how you use it. Because for me, the reason why I started scalping a bit more, and the reason why I started scalping the scalp model was purely because of the higher time frames of being quite slow for me. And to be fair, since I started the scalp model, the returns have been incredible for a short amount of time. As in a short period, the returns have been amazing. That's essentially what I'm trying to say. But anyway, the entry was taken via the confirmation model, and that would be the final part to that one. So this would be no, actually not final. So part 5, because I'll talk about the management of the trade. So if we see what happens next. Now, I don't generally sit and wait. I don't generally sit and watch the charts as such. But for me, so I took partials when price hit 20R, which was somewhere. He hasn't hit it yet, or has it? Yeah. So which was somewhere around here. So it hit 20R in the space of what? In the space of half an hour. Okay, hit 20R. So I secured 10R at this point, and then all I wanted to do was follow price. I think it closed at 28. Yeah, here. Now, if you're gonna watch price, and this is, I wasn't exactly watching it. It just happened. I just happened to be looking at it at that time because I had the laptop open next to me as I was sitting down. This is the reason why I closed this trade, and this is where we talk about more opportunities. So what happened here? This is what we need to focus on. Is we have breaker structure here, okay, and we have a breaker structure here. Now, it doesn't really reach the mitigation point as such, but for me, this breaker structure, I'm not too comfortable with it, given the fact that, you know, in terms of trend, our trend is now bullish, so I don't expect price to continue further down unless there's a liquidity grab. But for me, because of the lower time frame and price is fractal, I'm expecting price to continue higher, okay? So what I did is, when we had this second break, I exited the trade, and I no longer had positions on this pair. So I closed this trade, the remainder of the position, which gave me 14R. So overall, I had 24R secured on this trade. Okay. So what I'm going to do is I'm going to mark out the breaker structure. Let me mark that out for you, and that is this one. And same thing here. There we go. And trade closed fully due to change of trend. Now, this is when you need to decide, you know, when do you stop? Okay, for me, because I think exit points is as important as it is entering the trade. Okay, I don't think many of us follow it to an extent, because a lot of us can just trail. For example, what I'll normally do is, because I don't normally watch its charts, I would just follow the pair. I'll just follow where the mitigations are and trail the SL on the higher time frame, because once I've secured that 5 or 10R, whatever happens next, I don't necessarily care, because I'll just secure as partials go, as price moves on, and I'll look at the higher time frame and see if there's more potential for price to continue, which is why there's a reason why I held GU, the GU short that I showed initially, why I held that for longer and closed this one. Okay, because I felt that GU had higher potential and my entry was amazing on the higher time frame, to be fair, which wasn't intended. That wasn't intended. I was just following the scalp model. And what you need to think about is, when you take a trade using the scalp model, you need to understand, you need to think, is there more potential for this pair or not? Let me send this one a final. There we go. So okay, so at this point, if you wanted to follow price, I mean, we could follow it from here, because what we can see is, let me play this out. Because, for example, and this is when I talk about, you can find opportunities everywhere, because essentially we want to still want to follow order flow. Now, there's no form of mitigation going on here until we get to this point. So we have this low, high, break, okay, mitigation. Okay, I necessarily wouldn't enter off that purely because the extreme of this point was here and price didn't come here. If price came back to here and then continued, I will look for an entry point here. But for me, I would not look for an entry here. Okay, I would look to follow the mitigation. When we have the next break, you could enter from here. Okay, have an entry point here, and then you can continue. So this is what I mean in terms of order flow, in terms of following it, and in terms of following price and structure. You can do this all day long, just following the minute time frame, 5 minute time frame, whatever time frame you're comfortable. You just have to understand, your risk appetite and how frequently you want to enter the market. Because for me, the way I see true risk to reward is, say I entered, say I entered 2 trades last week, and they both hit 1 to 10. Okay, say they're both 1, for example. The true risk reward for me is 1 to 10. Okay, because I've risked my account twice. Okay, so for me, I want to try enter less and try pull out as much as I can from less moves. That's the way I see it, which is why I take partials and hold as much as I can off the trade and move my stop loss. Because for me, those little gains, even though those 5 hours or 10 hours seem small for some people, they do add up. There's a compound gain there. That's what we need to think about. But obviously, if you want to enter trades, you can just follow the scalp model and just follow what price is doing throughout the day, because the same thing happens. And essentially, what you want to look for is what happens during Asia, the Asian Open, the London Open, and New York Open. You just want to follow that, and you'll generally find these impulsive moves. And generally, with those impulsive moves, you can target like 10 to 20 pips. I would say you're almost guaranteed to have. Don't quote me on that, but you're almost guaranteed to have 10 to 20 pips of an impulse from London Open, New York Open, sometime during Asia. Asia generally can be a bit more of a rangy sort of period, but yeah. But anyway, I don't think there's anything further for me to say on this video. I hope this video was useful. I don't know how much I blagged or how much I waffled, but essentially, I just wanted to show you how I do these charts for you guys, and I hope it gives you a bit more sense. I know I probably didn't mark up as much, to be fair. It looks a bit dull. I hope you watched the video first, then it'll probably make sense. Yeah, I don't know what order I posted, but this video is useful. What I want to talk about is, obviously, if you want to join the mentorship, you can visit our website. It's the only way you can join, because a few people have been scammed by this page here. Where is it? I posted it here. Where was it? This one. I don't know how that looks legit, to be fair. I mean, look at it. Yeah, look at it. It just looks, I don't know, it looks ridiculous. Anyway, we don't take investments. We won't ask you directly for money. We'll never message you first. You have to come to us if you want to join, purely because, we want you to join on your own accord. If you just want the course content, as in you can learn our scalp model, you can learn our inception model for a cheaper option, you need to go to the course program, and what that'll take you to is this page, and you can sign up and you can stay as long as you like. You can cancel at any point. But obviously, what we're proud of is our mentorship, and this is something that, this is the main reason, because I love to teach, and the mentorship is the best place to grow with us. It's a one-off fee. It's a one-off fee, and what you can do, you can either join via the trade membership or join via the bootcamp. Our next bootcamp is in January, so it is a while away now. Actually, 2 months. 2 months away. 3 months actually. Where we teach you live over a weekend. We only need 2 days, purely because our strategy is simple. Although the thing is, I think when I say simple, it doesn't mean it's easy. It's a simple strategy to implement once you understand the logic. Okay, but as always, this is the only way that you can join the Discord. Now, with the Vertex course program, there is a separate Discord you can have access to. You can speak to us, because we do speak in there. But in terms of the mentorship, this is where you get the full access to us, where you can literally ask us anything at any time. We're here at your disposal. And I think this is where the most growth happens, and the community is amazing. But yeah, I think I spoke enough about this. But essentially, I was going to say is, avoid these scam pages. We won't send you files. You won't get anything like that. This, the only way you can join is via the website, and it's going to be in the link in the video, link in the description below. But yeah, I don't think there's anything more to say. I hope this video was useful for you guys, and I hope you all trade safe. Have a great trading week, and take care.